This example includes a settlement discount. Now, remember, before you work through any example or self-assessment question, that you need to have your IFRS 15 revision sheet with you as well as your standard. When I attempt any IFRS 15 questions or examples, I will always briefly draft my 5-step model. We need to identify if there is a contract, what is the performance obligations, our transaction price, allocate our transaction price to our performance obligation, and then we may recognize revenue. Now, important, when we look at our transaction price, we have identified that there is 4 important aspects. The first, that our transaction price can include a variable consideration. It can be that there is a significant financing component. There can be non-cash considerations paid, and then we need to measure this at fair value. If our fair value is not available, our stand-alone selling price. And then number 4, what happens if there is considerations payable to our customer? Now guys, when we look at the information that they've provided to us, they've indicated that there is an invoice amount of 150,000, and in terms of the contract, Z Limited offers its customers a 5% discount if the amount is paid within 60 days. Now, when you view our steps, do you see that this will be included in our determining of our transaction price, and that there is a variable consideration included in our transaction price? Therefore, when you refer to your revision sheet, you will remember when we talk about variable considerations, we need to ask ourselves the question, 1, is there a variable consideration included in our transaction price? If yes, we need to estimate our transaction price. Remember, we have 2 options. I want to indicate this to you on your revision sheet to ensure that you are with me. We can either estimate based on our expected value or our most likely amount. If you look at the information that they've provided to us, there is a settlement discount if our customer pays within 60 days. Now my question, how do we know if this customer will pay within 60 days? There is a 50% chance. We do not know. Therefore, guys, do you agree with me that we will have to calculate the value based on our most likely option? If we calculate the value on our most likely option, the first option can be that our customer will settle the amount, and then our total 150,000 we need to split between the fixed portion 142,500 and the discount portion 7500. Or option number 2 is no, our customer will not pay, and then we will have to recognize the total 150,000. Then you have to remember our second question. It has to be highly probable that there will not be a reversal of the amount. Now, if we look at the information provided, there is no refund liabilities. There is no information provided that can indicate to us that there will be a possible reversal. Therefore, this will still either be option 1, where we have to recognize the 142,500 or the 7,500, or option 2, where we have to recognize 150,000 turnover. Now, always extremely important to read the information provided. In the first scenario, they indicate to us, based on historical experience related to the customer, they can determine that the customer always pays before the 60-day limit. Therefore, our journal entry will be to debit our debtors as our asset increase, credit our revenue with a 142,500, and credit our allowance for settlement discount 7,500. Remember, our allowance for settlement discount is a negative asset. Therefore, you will not see this on your statement of financial position. Therefore, when the customer pays, we will then have to debit our allowance for settlement discount, with a 7,500. Now guys, you can work through scenario 2